Welcome, future entrepreneurs, to our quick guide on the basics of a partnership business entity. Before we get started, please give this video a like, press the subscribe button, and ring the notification bell so you can stay in the loop about crucial information that can benefit your business. Now, let's kick things off with a quick fact. Did you know that in 2021, there were more than 800,000 partnerships in the United States alone? That's quite a lot of businesses opting for this form of entity. So what exactly is a partnership? It's a type of business where two or more people share ownership. Each partner contributes to all aspects of the business, including money, property, labor, or skill. In return, each partner shares in the profits and losses of the business. The primary advantage of a partnership is that it allows business profits to be taxed only once. The profits pass through to the partners, who report them on their individual tax returns. This is in contrast to corporations, which are taxed twice, once at the company level and again at the individual level. Now let us look at the types of partnerships. There are three main types, which include the general partnership, limited partnership, and limited liability partnership. A general partnership involves two or more people conducting a business for profit. Every partner is involved in the day-to-day operations and has personal liability for the business. In a limited partnership, there is at least one general partner who manages the business and bears full liability, while the other partners are limited partners and have liability only to the extent of their contributions. The limited liability partnership is a hybrid form, where all partners have limited liability and can participate in the management of the business. In 2020, limited liability partnerships made up nearly 20% of all partnership entities in the U.S. They are becoming increasingly popular as they provide a shield for individual partners from personal liability for the actions of other partners. Despite the many benefits, a partnership also has a few minor drawbacks. Disagreements among partners could impact decision-making, and each partner is personally liable for the debts and obligations of the business in a general partnership. To mitigate these risks, it's advisable for potential partners to draw up a partnership agreement. This agreement outlines how profits are distributed, the process for resolving disputes, and the procedure for dissolving the partnership. So, there you have it, the basics of a partnership business entity. If you want to learn more, please visit legalregistration.com, or you can call our business formation team right now at 877-955-7111. Also, what do you think about the advantages of having a partnership? Which benefit is your favorite? Leave your comment below and let us know what you think. Please also don't forget to like the video, hit the subscribe button, and ring the notification bell so you can keep up with important business registration information.